Introduction to debits and credits. What are debits and credits? Debits and credits are terms used by bookkeepers and accountants when recording transactions in the accounting records. The amount in every transaction must be entered in one account as a debit, left side of the account, and in another account as a credit, right side of the account. This double-entry system provides accuracy in the accounting records and financial statements. The initial challenge is understanding which account will have the debit entry and which account will have the credit entry. Before we explain and illustrate the debits and credits in accounting and bookkeeping, we will discuss the accounts in which the debits and credits will be entered or posted. What is an account? To keep a company's financial data organized, accountants developed a system that sorts transactions into records called accounts. When a company's accounting system is set up, the accounts most likely to be affected by the company's transactions are identified and listed out. This list is referred to as the company's chart of accounts. Depending on the size of a company and the complexity of its business operations, the chart of accounts may list as few as 30 accounts or as many as thousands. A company has the flexibility of tailoring its chart of accounts to best meet its needs. Within the chart of accounts, the balance sheet accounts are listed first, followed by the income statement accounts. In other words, the accounts are organized in the chart of accounts as follows. 1. Assets. 2. Liabilities. 3. Owners, stockholders, equity. 4. Revenues or income. 5. Expenses. The double-entry accounting system. Because every business transaction affects at least 2 accounts, our accounting system is known as a double-entry system. For example, when a company borrows $1,000 from a bank, the transaction will affect the company's cash account and the company's notes payable account. When the company repays the bank loan, the cash account and the notes payable account are also involved. If a company buys supplies for cash, its supplies account and its cash account will be affected. If the company buys supplies on credit, the accounts involved are supplies and accounts payable. If a company pays the rent for the current month, rent expense and cash are the 2 accounts involved. If a company provides a service and gives the client 30 days in which to pay, the company's service revenues account and accounts receivable are affected. Although the system is referred to as double entry, a transaction may involve more than 2 accounts. An example of a transaction that involves 3 accounts is a company's loan payment to its bank of $300. This transaction will involve the following accounts: cash, notes payable, and interest expense.